Welcome to the Deep Dive. We're here to cut through the noise and really zero in on what matters from the sources you follow.
Glad to be here.
Today, we're tackling something specific, a pretty widespread belief, actually, that can trip up even folks who've been around the block. This idea that order blocks always hold.
Yeah, that's a big one. You hear it a lot.
So our mission today, we're diving deep into excerpts from a video called Order Blocks Always Hold. We want to pull out the key insights, really clarify this, and let's just state the myth right up front. This notion that order blocks are, I don't know, magic levels that have to hold. Because honestly, when you look at it just like that, in isolation, it's flawed.
Fundamentally flawed, yeah.
Yeah.
And it leads to, well, mistakes, misreads, bad decisions.
Exactly. Let's unpack that a bit.
Yep.
Because it is damaging, right? You see an order block, you're expecting some kind of reaction, maybe a bounce, maybe it holds firm.
Right.
And then nothing. Price just slices through it. And you're left kind of scratching your head, wondering what you missed.
Or worse, you took a trade based on it, and now you're taking a loss you maybe didn't need to.
Right. It's like expecting every single door you see to open, but sometimes it's just, painted on the wall. Or it leads somewhere completely unexpected.
That's a good way to put it. And I think that's where a lot of you listening might be. You're thinking, okay, but wait, aren't order blocks supposed to be these, like, super precise levels?
Yeah, the textbook definition almost.
Where the smart money, the big institutions, are supposed to step in to make a price turn, or at least pause. So if they don't always hold, well, what's the actual point?
What are we missing?
Yeah, what's the missing piece that makes them work sometimes and just fail other times?
And that right there is the critical question. It's where the real learning is, and it comes straight from the source material we're looking at. Because the reality is, an order block, just by itself, it's only one piece, a small piece, really. It's the context. That's the key. The market narrative, what the higher timeframes are suggesting, where the liquidity is, that's what really decides if an order block matters or not.
Right, without that context.
You're basically operating on blind faith, just looking at one puzzle piece and trying to guess the whole picture. It doesn't work.
Makes sense.
And what's really interesting and super important here is that the source itself explicitly teaches how certain order blocks can be negated. It's not random chance. It's a defined concept.
Okay, so it's predictable in a way.
Well, the conditions for it can be understood. The source in ICT Mentorship 2022, episode 18, was very direct about this. Let me read the quote. I'm telling you how to negate certain order blocks that you would otherwise expect to see it trade to because of different YouTube channels or other people trying to teach my stuff, and they don't know what they're talking about. Okay, they have no idea what they're doing.
Wow, pretty direct.
Very. So the takeaway for you listening is huge. It's not about just drawing a box and hoping for the best. It's about understanding the conditions that make an order block valid. And, just as crucial, the conditions that make it invalid. When will it likely get run through?
So it's about probability and context, not certainty.
Exactly. It lets you move past just simple pattern spotting into, a much more nuanced way of looking at the market, asking, okay, why might this work here? Or why might it fail here?
Okay, so an order block can be negated. And that leads to the next logical question, doesn't it? How do we actually know? How do we spot when that's happening? Or maybe even anticipate it?
Yeah, is it like some news event coming out or...
Or is it something you can actually see in the price action itself?
Yeah.
How do you read the market's immediate intention? Because if you're in a trade based on that block, you need to know fast.
Great question. And overwhelmingly, the answer is... it's in the price action. You can often see the negation happening right on the chart.
How so?
Well, when the market's bias is really strong, when it's really committed to moving aggressively in one direction, that order block, it can just get smashed through, like zero respect shown.
Smash through.
Okay. Think about a really strong downtrend, right? A bearish market. If price is determined to go lower, it's not going to politely stop and reverse at every little potential support level, every bullish order block it meets.
It'll just power through them.
Exactly. It'll just keep going. That lack of respect is the signal. And this act of disrespect, it's powerful information. It was explained quite clearly in ICT Mentorship 2023, August 18, 2023 live trade walkthrough. Here's the quote. If you're bearish, and I teach my students, if you're bearish, you want to see down close candles be smashed through, you don't want to see any respect of that at all. That's bearish institutional order flow. You don't need some kind of depth of market. You don't need some kind of a VWAP or volume profile stuff. You don't need that. Okay.
Right. Yeah. So visual evidence is key.
Precisely. Those Down close candles, he mentions, they're just candles closing lower than they opened, showing selling. And bearish institutional order flow is that big money pushing price down. The point is, seeing price ignore potential support, just blow right through it. That tells you more about the real flow than a lot of complex indicators might.
Okay, I see. So connecting that back, it's not just that the order block failed, it's more like the market actively disrespected it.
Yes.
Because the underlying algorithm, the order flow, was just so strong in the other direction. It's a signal that the bigger picture, the main narrative, is just steamrolling that local level.
Exactly. It's dynamic. It's about the flow.
But how do you avoid, like, reading too much into just any fast move? Sometimes price just moves quickly,
Yeah.
right? How do you differentiate that disrespect from just volatility?
That's a really good nuance to pick up on. It's about the character of that move through the level.
Okay.
When it's true disrespect in the way the source means it, you're usually not seeing a lot of hesitation. No big pause, no significant pullback right after hitting the level.
Right. It doesn't struggle there.
No. You see strong, committed candles pushing through, often large bodies, small wicks. It shows that strong directional pressure. It's like the difference between someone nudging a door open versus someone using a battering ram. One shows intent and force.
Got it. So look for that conviction in the price delivery itself.
Yes.
Okay, but let's explore another angle. What if it doesn't just fail or get smashed through? What if the area around an order block, or what you initially pegged as one, kind of morphs into something else?
Morph. How do you mean?
Like, does it ever flip roles? Does price interact with it? Maybe run slightly past it, and then that same area becomes important again, but in the opposite way, almost like a plot twist.
Precisely. Yes, that definitely happens. And that brings us to another really key concept from the source. The breaker.
The breaker.
Yeah. A breaker basically is a pattern where price does something specific. It often runs out, liquidity takes out stops near what looked like an order block area.
All right, like a stop hunt.
Kind of, yeah. It pushes to grab those orders. But then, crucially, it reverses hard. And that area, it just broke through. It gets repurposed. It flips.
Okay, so it breaks a level, reverses, and then that broken level holds as the opposite. Support becomes resistance, or vice versa.
Got it. The source actually laid this out very clearly in ICT Mentorship 2022, episode 39. Let me give you the definition from the source. This swing low here to a higher high than that of here is a breaker. Okay, that's my ICT bearish breaker. What is a breaker? A breaker is a pattern where price runs out a pool of liquidity, in this case is a buy-side liquidity pool, and then it reverses and trades back down below that short-term low if it trades back up to that. And the narrative is bearish.
Yeah.
Notice that it's not just simply we have this pattern here and that's all it is. No, you must know what the market's likely to be reaching for if you leave that out. It's not a breaker, it's a gamble, it's a guess, it's a speculation that's aimless.
Okay, that's dense. Let's break that down a bit.
Yeah, so imagine price makes a low, then rallies to make a new high, taking out a previous high that's running the buy-side liquidity pool.
Got it. Stops above the old high get triggered.
Right. Then price reverses, drops sharply, and breaks below the short-term low it made before the rally.
Okay.
Now, if the overall market narrative is bearish, and price later rallies back up to the level of that short-term low it just broke, that low now acts as resistance. It's been broken.
Okay. So the failure to hold as support, combined with the liquidity run in the reversal, transforms it.
Yeah.
But the key is the narrative.
Absolutely crucial. The source stresses that. It's not just the pattern. You must know the likely draw on liquidity where the market is trying to go overall. Without that narrative context.
It's just a random pattern. A gamble, like the quote says.
Exactly. Aimless speculation.
Okay, so synthesizing this for you listening. An order block might not hold like you thought, not because it was wrong, but because the market's real plan was different. Maybe it was setting up a liquidity sweep.
Right.
And actively transforming that area into a breaker. So the real skill is reading the underlying story, the narrative, the hunt for liquidity, not just the candle pattern itself.
That's it. The pattern is a clue, but not the whole story.
It feels like it requires a much more dynamic understanding. You're not just reacting, you're almost trying to anticipate the plot.
It definitely does. And the source is really emphatic about this holistic view. So yeah, it's not just about one candle pattern. It's about liquidity, market structure, the narrative.
Which I imagine can sound like a lot to juggle in the moment, especially if you're used to just finding a block and setting an order.
It is a lot to integrate, absolutely. But the source insists you can't just cherry pick one concept, like an order block, and expect it to work consistently on its own.
You need the whole toolkit.
You need the whole context.
Yeah.
You have to see order blocks as part of the bigger landscape of PD arrays, these key price zones, the market targets, and understand the timing, the narrative, where price is ultimately going.
Right.
An order block is definitely a valuable tool, no question. But like any tool, you have to know when to use it, how to use it.
And when to recognize it's being ignored or even turned into something else like that breaker.
Precisely. It's like having a really fine screwdriver. Amazing for the right job, useless or damaging if you try using it as a hammer.
Yeah, it really lands. And it highlights why this matters so much for you listening. This isn't just, some minor theoretical point.
Not at all.
This is about understanding how price is actually delivered, likely algorithmically. It pushes you towards a deeper, more critical way of looking at charts beyond just simple shapes.
It's about moving from just seeing patterns to interpreting intent.
Fundamentally changes your approach.
It really does. So, wrapping up our deep dive today, we've hopefully shown that the myth of order blocks always holding just doesn't stand up.
Definitely not in isolation.
Context is king. The market narrative, where the liquidity is, what the higher timeframes are doing, that's what dictates whether an order block is likely to be significant or just noise.
That isolated knowledge can really lead you astray.
For sure.
And that brings us maybe to a final thought for you to chew on. Think about other areas of your life, totally outside of trading. Are there other common truths, things you take for granted, or simple rules you follow that might actually just be one small piece of a much bigger, messier, more contextual picture?
It's interesting.
What simple rules might hide a deeper truth once you start factoring in all the circumstances around them? Something to ponder.
A great question to end on. Thank you for joining us on this deep dive. We really hope these insights help sharpen your understanding.
Keep digging, keep questioning.
Absolutely. We'll be back with more insights soon. Thanks for listening.